Italy was stabilising, but I think they've had a bit of a rise in cases, and there's a few more cases that have been imported into China. They reckon it's not domestic, but they think they're being imported in now. So there does seem to be,
Wow. What's wrong with
yeah.
the border control?
Well, this is the thing. Unless they're just not doing border control, I don't know. I don't know what the situation is with that really. But
Mind you, I can't talk what the Australians did, man, with those boats
yeah,
unloaded.
well, with the boats,
You got to be kidding.
you talking about that boat, right? The ship.
Well, there were actually four of them, four boats.
Yeah,
They only spoke about one because it was the one that had more positive tests than the others.
yeah.
There were only symptoms on the others, no tests, but they let them all go anyway.
Right. Yeah. Oh, it is stupid, isn't it? I mean, I think
Unbelievable.
I think some of the problem with it is that people are going to end up going too early. You know, with thinking it's fixed, and then we just kind of like spiraling into another problem again. Um, and it's got to be a worldwide thing. It looks like Trump is quite happy to effectively prioritize the economy over people's safety now as well.
Yes, well, I heard his latest as absolutely. So,
Yeah,
come on, really?
yeah, crazy, isn't it?
Come on, let's get back to work. What? Come on.
Yeah, yeah. Well, it is causing the market to rally. This is what we see going on, and I fully expect it to attempt now to get back to 6,000. We're at 5,500, so I think some further upside here is pretty likely. Where's that monthly pivot? It's way up top. Yeah, I think the upside here is pretty likely. Wouldn't be surprised at all to see that get pretty close to 6,000 at this point.
But
So
would that be a good place to maybe get back into a short? Do you think?
yeah, undoubtedly, mate. I mean, this is the thing. I'm quite happy to let this go. As I said yesterday, there was an opportunity here to trade, and I think the common feeling is, I've missed out. Should have got in for the long, which maybe I could have, but I've already got some trades on which kind of take advantage of the long anyway. And really, what I'm waiting for is for this now to get up somewhere and just start to turn around again, because I don't believe in the rally, and it might even be that I go in at a price, tentatively go in at a price by the end of the week if I don't actually see a turnaround. And that's purely because of the potential gaps over the weekend that we have seen, So you think things pick up again over the weekend. We gap down and miss a decent price point to get in at. So I will be looking for the shorts as late as the Friday close, and probably if it's at a price point on the Friday close, then I'll probably tentatively start selling into this. But I will have a few price points that I will continue to scale in at and make sure that I'm covered on the way up if it does keep going. So yeah, I'm down with a short, mate. I think that we probably, there's every chance that we continue to rally from this point, and I'm quite happy with that. Quite happy to see it go. There's some stimulus packages from the Senate that the market seems to like, but can't get away from the economic numbers, and the economic numbers are pretty dire, and I think they'll continue to be that way.
And we haven't solved coronavirus. I mean,
and we haven't solved the elephant in the room. Exactly that.
So, yeah, why would we think that this is the end? I can't think like that, and I'm exactly the same as you. I'm waiting on not necessarily a price, but a signal to say that this rally is over.
Yeah.
But having said that, on my 2-minute brief today, I do have a short order set at a limit on a. Can't talk about it here because it is on Aussie Swissy. I think Aussie is running just a little bit too fast, too soon. So I'll be looking for that to come back at some stage. And I do have a limit entry order set on that one when it gets to a certain level. So, and that's not my MO. I've got to tell you, that's not something that I do. That's the way I feel.
Yeah, well, this is the thing, isn't it? I think everybody that that will, have experience with trading, won't be looking at this rally and thinking, oh, everything's all right now, we can start getting back in. I think everybody's going to be going, what a great opportunity finally for us to get a decent price to the downside, because that's what we all believe. We all believe that this market is coming down. So, and this is the issue, isn't it? And this is the thing about trying to take these trades in the opposite direction than your belief is, that your worldview is. It seems like it seems counterproductive. So yeah, I'm with you, mate. I am effectively waiting for a signal to get me in on a short, and so far we haven't got it. We've got this nice little trend going on the hourly chart here, and we'll continue to do that. And until I see that break down, then I won't be really comfortable with it coming down. That doesn't mean that my price point won't be, which I'll put in my 2-minute brief later. That doesn't mean my price point won't be higher than a break of the trend. It just means that I'll try and get in early, and if it breaks down this trend, then I'll probably start loading in at that particular point. I think this market not only comes down to the lows again, but breaks them. I think we've probably got at least another quarter of downside. I don't think that this market will pick up until the end of the year. I think the coronavirus, we're still in the midst of it, in the eye of the storm. So I think there's opportunities now to sell this market off. So that's what I'm waiting for. FTSE 100 has opened up, and we are currently trading at where are we looking at? We are looking at 82% of stocks opened in positive territory. So we are looking at higher prices right now, mate.
Right, mate. Happy days. We'll go and have a look at the pound then, shall we?
Let's do that. Yeah, let me stop sharing and pass it to you.
Okie dokie.
Incidentally, I'll be looking to add to my gold trade as well. So that looks like it might creep down a little bit. So I'll be looking for it to come back down and add to that point too.
That was suspended at some stage today too, I believe.
Yes, it was. You know what? my trade to the upside moved so much yesterday. I was up for 16% at the end of the day on the trade that I had in my stock. That nice. They had to limit up. Yeah, it was great. I'm a bit. Yeah, I'm going to wait now for it to pull back a bit and see if I can add to it. I really like this potential for gold stocks to continue higher.
Yeah, the birds are singing it. That's for sure.
Yeah.
So
yeah,
I can't argue with it. Okay, where are we? We are open. So we've got 3 candles. One.
Good morning,
2,
Kumar.
And if you could send me that link again, I still can't get into this YouTube thing for some reason, mate. That's a weird and wonderful.
Oh, were you able to get in yesterday?
Yeah, I got in on your link, but I can't.
Brilliant.
I just can't find it for some reason.
No problem, mate. No problem.
I looked at Learn to Trade Live and Free. I've looked at ATW, and all I see is recordings. Don't see the live.
Shoot it over to you. There you go.
Cheers. All right, so I'll explain it for the rest of this week, and then I think we can just place the order from then on, because everyone will get sick of me explaining this, I'm sure. So the trade is this. We take the range of the last 3 bars prior to 1 hour bars, prior to London Open, and in this case that is that bar, and that bar. But as it turns out, that bar is the exact range because we've had 2 inside bars to close off the session prior to London. So what do? We put an entry 15 pips above the high of that bar. You can see the high of that bar is 1.18581. I will make that 1.1859. Then I'll add 15 pips, which will be 1.1874. And the low will be, oh, you little dog, disappeared. Why did it do that?
All sorts of problems this morning, mate.
Oh man, unbelievable. Anyway, let's try and place this order, shall we? It is a pending order and it's long. We place both a long and a short at the same time. Now I've forgotten the number. 1.1859 plus 1574. 1874. And the stop loss is 10 pips under the same bar, because that is also the bottom of the range of the last three candles. And the level will be 1.1793 minus 10. So 1.1783 will be the stop loss. For the long. Now we just flip that on its head and make it the short order in reverse. So 1.1783 will be the entry for the short, and 1.1874 will be the stop loss. So let's do that. New order, sell stop. .1784, I think it was, if I'm not wrong. Was it 84? Can't remember. That'll do for now. I can fix it anyway if it wasn't. And 1.189. Can't remember that either. High 18574 was the stop loss. So that makes that one not right, I think. What was the low here? 1.1783. One out. Okay, so there's the short. So there we have it. We have a long order in place here at 1.1874. We have a short order in place here at 1.1783, I think it was. And what we now do is wait till we get entered into the trade. If it's short, we cancel the long order. If it's long, we cancel the short order. And we then switch to a 15-minute chart and trail two seller bars if we're short, buyer bars if we're long. So we'll explain yesterday's trade and we'll show you exactly how that works. So yesterday's range was, I forget, maybe those three. What was the 10 o'clock? That one, yes. So the range was these three bars, that one, and that one. So we had a short here. We had a long here. The long got triggered, as you can see. And it got triggered with that bar there. So we'll isolate that and we'll go to the 15-minute chart and show you how we trailed our stops. So we got taken in here, basically. Or was it here? I can't remember. It doesn't matter anyway. There's all of these bars that we could have chosen. Say we got taken in with that bar, right? So then we're looking for two buyer bars in a row, rather. So 1, 2 there. As soon as we see that after entry, we move our stop loss. We'll put in our stop loss, our trading stop. So we move our stop loss underneath those two bars, there and there. And then we wait for another two buyer bars. So we put our stop loss 1, 2, there's 2. We put our stop loss under there. And we continue to do that till we run out of two bars. So that's where we finished up. Why? Because two buyer bars here, stop loss underneath that bar, then the trailing stop got hit by this candle here. So that was our profit yesterday. It wasn't spectacular, but it was a profit nonetheless. All those little fish are sweets, and that is how you manage the UK session pound US dollar breakout trade. It's pretty simple formula, and it is in beta test mode, as I continue to say. This is not something that you go and put a lot of money on, because we are not convinced yet it's the best way to trade it. Today, what do I see on the pound? Let me have a look, see. Well, I see this big drop off from 2 weeks ago, and I see the kind of base that's been formed, the range that's been broken, and we've now hit our first resistance level, which is the weekly pivot. Look, I'm totally on board with what Ash was talking about before. I don't know that these big moves are done, but that said, I need to think to myself, where's the most logical place for sellers to get back into this market if they so wish? Well, there's one of them. Weekly pivot's one of them. The next one would be pretty much where we've got whatever that red line there represents. I think it was yesterday's trade. That would be the next, because of these two lows here. Go a bit wider and you'll see how strong that level is. So it's also around number 1.20. So I'd be thinking that in the first instance as my first opportunity to jump back into a short here. In other words, I think there's a bit more rally left here, maybe for the buyers or those who are taking profit to get out of their short positions, and therefore come back to 120. So I think 120 would be the first place I'll be looking for a selling opportunity. We shall see, but all eyes on the weekly pivot. I don't dismiss the weekly pivot lightly by any stretch. And if we were to come back under I've got a resistance trade line here. Yeah, I do. If we were to come back under there and say hit the weekly pivot and the trend line from below, I think that'd be good enough for me to trade this short, and I'd certainly be taking profit at the daily pivot and this level here if we got that lucky, and then just let it rip to see if it does take off again short. But yeah, I'm okay with that, but I think that would be an entry that I would treat with respect. In other words, the momentum, you'd have to respect the momentum and only trade that with a very small stake in the market. If it then does turn around and go through your daily pivot, you might want to scale in a little bit, give it a little bit more of your money so that you can get a better return. Of course, that would be the idea. But for now, today, yes, I see the opportunity for this to continue long. I don't want to trade it long, but if it got back underneath the resistance area and retested it, then I would be prepared to trade it short and take some profit early. That is the pound trade, mate, for today. The bias is short.
Bias is short. Okay. Well, let's have a
we got the bias right yesterday and got the money, but not a whole lot of it. It would have been nice to get all of that, but yeah, look, as I said, small fish are sweet.
Yeah, pound is looking similar to the other market. I tell you what, I mean, at the 120 level, 190, one spot 190 level, one spot 1900 level looks like a pretty good area for a short, doesn't it? On the pound,
yeah, I thought 120 was a better level.
Yes,
but yeah, certainly looking at one.
Oh yeah, I see what you're looking at. Yeah, the 120
Yeah.
does look good. You're right. Yeah. And difficult to have complete confidence with a pound. Euro pound. Check that one out, buddy. Euro pound. Check it out. No, just have a look at it on a couple of weekly charts, and I think that one is. You have been. I mean, I think it's still early. I've got to say.
So do I. That's why I'm not in.
Yeah, I mean, certainly, we talk about topping patterns, throughout the show and throughout all the courses, and if you want to see something that is an imperfect M topping pattern, then that one is just a few pips away from forming. So I think that one's a really interesting one. So let's have a look at that in the breakout strategy again. That's Naveen. Is asking if you would explain the breakout strategy again.
Sure.
Jeff absolutely will do that, and then we'll look at the pound euro, which I think is an interesting looking market.
We'll do that on your chart, mate, because as always, I only look at the majors in this show, and
yes, no problem.
My opinions are posted in the 2-minute brief.
No problem.
The miners. So let's go with the pound again. Okay, we are trading a breakout of the previous 3 bars to London session open, right? 1 hour bars, that is. So all we do on our 1 hour chart, I'll just go in a little bit tighter. On our 1 hour chart, we pick those last 3 bars. So this one, and this one. Maybe if I used a pen, it might help. Let's do that.
We'll look at the euro dollar as well. Short bias for me on that one, and Jeff will have an opinion as well. So we'll have a look at
I'm
that.
short. I'm still short, actually. I'm still in the trade.
Oh, well done.
Red pen.
I will show you what I would like to see on that one.
Okay, so hourly chart. Last 3 bars prior to London Open. This is London Open, which is the current bar. So we want this bar, and this bar. So we take the high of those 3 bars, which is that one, the low of these 3 bars, which today is that bar. So it's the 1 bar we're trading basically with 2 inside bars here. And what we're trading is the breakout of that range. So if that range breaks, we want to be part of that breakout. Pretty much that's the theory behind the trade. Okay. How we're doing that, and this is as old as the hills, this actual belief. So, you know, it's not it's not new by any stretch of the imagination. But what is a little bit different is the way you approach it and how you get into it, and then how you manage it. So how we're getting into it is we're using the high bar or the high of the range, and we're adding 15 pips. 15. So high plus 15 is our entry level for the long. The stop loss is the low minus 10 pips. So in this case today, I think the numbers were 1.1873 maybe, and 1.1784 or 83, thereabouts. It was in 1 or 2 pips of those, but you can work that out. So what we're saying is we've got a long order placed if we break out to the high side, and we've got a short order placed if we break out to the low side. Now, the theory being that if we do break out, it will break out and continue to run, no matter which way it goes. The reason we want to give it a little bit of space and add 15 pips and 10 pips is we don't want to be taken in on an equal high. We don't want to be taken in on an equal low, which is very much a common factor like this. That's what you don't want to happen, right? So that's what we're trying to avoid by going 15 pips above and 10 pips below. Why 15 above? We're accounting for the spreads, basically. So the difference and a little bit of change there as well. So once we get taken into the trade, if it is a long, so this breaks out to the high side, we then cancel the short order, or vice versa. If we get taken into the short, we cancel the long. And as soon as we get taken into the trade, we then switch to a 15-minute chart. And from there, we start our trade management by trailing our stops. So 15-minute chart, let's say we get taken in short, right down here. Let's say we get taken in the next candle and we're going short. We then wait for 2 bars in a row. This is after the bar that takes us in, right? So if we were taken in, let's say by this bar, if we're going long here and we were taken in by this bar, we've got to wait for 2 buying bars if we're going long, right? If we're going to wait for 2 buying bars in a row before we can trail our stop. You can't count the one that took us in. So there's 1, no good. Next one's a seller. There's a buyer, there's another buyer. So we can move our stop to there. Then we've got to wait for another 2 buyer bars. Not here, half, 2. So we can then move our stop up to here, at which time we would then be taken out because our trailing stop would have been hit. And it's exactly the same going the other way. You wait for 2 seller bars in a row. So 2 seller bars here, you trail your stop above the 2 bars. Hope that helps whoever asked the question. And I'll go through that again one more time tomorrow. And from then on, it'll be questions only. I'll just place the order and won't explain it because most of you in the room would be getting sick of me explaining it. And I think it's probably like a recording that keeps going round and round. I say the same thing pretty much every day.
Naveen says he's got it. I think it's all right, mate. Do you know what? I don't think it's a problem you explaining it. It just kind of it clarifies it in people's mind what's going on.
Yeah,
So
exactly what they're doing. Mhm.
yeah. So it's a
Yeah, there's nothing like
manual.
understanding it.
Nothing. um, okay, let's have a look at some of these other charts then. So the dollar, the pound dollar, and we will. Is this so? One of the questions is the strategy only used for the pound dollar? And I think it is, as far as I'm aware. Is that right, Jeff?
Yeah, look, here's my answer to that question. Have a look at US Open and see what happens with, say, dollar yen, or say dollar CAD, or say dollar euro dollar. Just have a look, monitor it for a while, and see if the US Open coincides with the breakout. And I'd encourage anybody to do that on a regular basis anyway. See what happens at the
Absolutely.
Open, see what happens at the close, see what happens after the first news event. These time frames are absolutely critical to where you should be trading.
Can you
And this
use
is
this on
why,
an ATW account? Is the other question with that, and I guess the answer is yes.
yes, you can. There's
Not a
no
problem.
problem with that. No.
As long as you use the correct risk management, I think all of them are
Absolutely.
okay.
Yeah. Yeah.
So let's have a look at some of these other charts then. So we have got the pound. Now let's look at the pound in a bit of detail against the euro, because what we have here is a classic pattern, and I love these patterns that we have in the markets, because it's a way that we can start looking for price points to trade. So we have a classic looking, slightly imperfect M topping pattern, but it's nice and crisp where the neckline is. So if we consider this to be our neckline along here, we have a high, we come down to a point of support, and we come away from that point of support. Now, the fact that we haven't reached the equal high, so a double top is really the the ideal scenario, but the fact that we haven't reached the double top is actually a positive for the M topping pattern. It does suggest that the price point is even weaker than it should be on a normal pattern like this. But we are starting to see that there's this M here. Now, there are ways that we can trade this to the downside, and the way that I'd be looking for this trend line along here, which is going to start then looking like a descending triangle, which means that when price comes up, or if price comes up to the trend line, then we can take a little speculative position along the trend line, here, or maybe it's a bit lower. Maybe it's actually in conjunction with the weekly pivot. Who knows? But it's probably going to trigger maybe not trigger, but get to that price point by next week. So maybe the pivots have moved, and maybe it goes in confluence with a pivot. At that point, I'd want to put in a speculative trade, and a speculative trade means that we go in pretty light. Now, after that, if price comes back down and gets through this point, as it comes back again, then we have a better signal to show that the price has genuinely gone. It's a better signal to suggest that the price is generally broken down, and we'd be looking for further downside from there. So there's two potential areas, yeah, and that's about the euro. So let's have a look at that as well.
And while you're doing that, while you're going there, CAD yen, Chris, my rule is at the end of the day is to cancel the order, which I did. And I actually placed it again this morning. But then I had I don't know what it was, one of those little visions you have in your mind that may be right, may be wrong, but it was telling me not to take the trade. So I canceled the order. I don't know how that's going at the moment. Definitely would be in the trade. And CAD yen. Yeah, you should be very, very close to your first take profit if you're in that trade still. So my counsel would be to take half off at the TP1 rather than the third, as I said before. I've got reservations that we can get through that gap again and go on with the job. That's just saying. But I'm not in it, not in the trade anymore. Okay. Sorry, mate.
Brilliant. No problem at all. Okay, so we are also so the euro dollar. Euro dollar for me is still a short, and I'll be just, and these rallies are good. This is effectively a bit of a corrective rally in the opposite direction. So we still want to be long the euro dollar, and we're effectively looking at this trend line here. So even this one, I wouldn't want it getting through the weekly pivot and beyond the trend line. That would change my opinion on it, and I'd want the chart to develop further before I was looking for the short. Doesn't mean that I wouldn't be interested in the short, but it would mean that the short in this particular phase would be over. So I'd have to see a different signal and a different price action phase to get me in short. But right now, the short is still very much on the cards. And if we look at this,
look, Chris and PL was saying, okay, I think it's your own ends, guys. If you can't see the video, Chris, everyone else can. So you must have an issue, mate.
Yeah, I did notice that they thought it had dropped off. It didn't look like it had dropped off my end. I didn't kick anything.
I can still see it on YouTube. So
great. Okay. All right. So we are looking for the short in the euro dollar still, and if we look at this on a clean chart and look at some of the longer term time frames, that you can see this monthly bar, it's not formed yet, but it still looks a little bit negative here. And we are effectively looking at this on the weekly, and when we look at this on the weekly, what we are then finding is a potential area for a resistance point. Does that resistance hold? We don't know. So that's where we're kind of like looking at the shorter term timeframes to get clues that may happen. Now, the highest point here that got shoved down takes us a little bit higher. I'm going to leave that line in place there. And that takes us to this resistance point. Now, if that resistance point was seen again and effectively closed above, then that's going to take us above this trend line. So that becomes a really important area, the 1.0. Let's see if we can maybe just get a round number on that. Not very tidily. Let's call it 1.08900, something like that. Would be a nice, a nicer number to kind of be focusing on. So I'll be focusing on that number. And if the market took off and closed above, then would I be trading long? Would I be looking for longs? Probably not. But what I would be looking for is for potential downside in a different area. I wouldn't be looking in this area anymore for the downside to resume. I still think there is downside to come with the euro dollar at this particular stage, but the price action does have to prove it. Now, if it's in this particular phase, I mean, we do have potentially an inverted head and shoulders, but we have to remember we do look for bottoming and topping patterns when we are confident of direction. But if I'm thinking about this direction coming down, then I'd be looking for this inverted head and shoulders to fail rather than to complete positively. So there's your left shoulder, there's your head. And when we're sort of starting to form, what looks like a right shoulder over here. So I'd be looking for this to break down instead of breaking to the upside. And that would be extremely bearish because it is a bottoming pattern. So the bulls are going to be stepping into this market. So then if we go down to the hourly chart here, really, I want to see for some downside, I want to see a trend line break. Now that trend line might be here, or it might be here. And again, this is where the strategy starts to come into play. I wouldn't be interested in just selling off a price unless my strategy says this looks bearish. So if it looked bearish to me, if it got up to this point and I have a strategy to get me in, then I'm trading this down. But I am only looking down, and it's similar to the FTSE in many respects. With these markets, I am on occasion, but not always, I'm not trying to get every move. I don't mind that I'm not in the FTSE 100 long here, because my overall view is for downside. So what I'm looking for is for this to end. So I'm just allowing it to go and not getting involved in it. So we don't have to trade in either direction. I'll be much more interested. And my views on this have changed, over the years and over the months, I suppose. And
yeah, because I'm much more used to get pissed off when you're not in the trade, right?
Yeah, exactly. I'd want to get every move. I'd want to
Oh,
get
I've
the
missed
upside
out.
and
I've
the
missed it.
yeah,
Yeah.
yeah. But actually, I don't look at this as missing out anymore. You know, the way I look at this this kind of stuff is this is getting me a better price for my view, and my view is that we are headed for recession. And my view is that we do have data points that are going to continue to be poor. And my view is that we don't really turn around until either the last quarter of this year or even into next year. So this just gives me a better price to go short on, which I'm more than happy with. So if I look at this on longer term timeframes again, then I come at this on the monthly, and the monthly price point that it's probably trying to get back to is this test area here, which is around about 6,000. So it's attempting to get back up there. Whether it gets there or not is not an issue, but it's attempting to get up there. And at that point, I'll become really interested. Now that's 500 pips away, which is potentially 10%. So I'm quite happy to give up that 10% with a chance of making 50% on the way down, or 30% on the way down. And also with a pretty with a market that I don't believe should be going with a market that I don't believe is yet at value. Maybe that's the best way to put it. I don't think the stimulus measures are going to be the fix of this. I think that there's going to be probably some more pain to come. So that is a point that I'm
It's not an
interested.
economic situation. It's a health situation.
Yeah, which almost
It's
it spills into the economy, doesn't it? And I suppose that's the thing. I just I think that there are probably companies that are still really concerned about the
oh,
situation.
absolutely. My issue is not so much that it's there's a huge difference between the dire situation, or the direness, if there's such a word, of the situation, but throwing money at an economic situation can solve that issue. Throwing money at a medical situation that at this point in time we don't know how to control, to me, doesn't change the fact that we've still got the issue.
Yeah,
Throwing
I
money at
agree
an
with that.
can change the issue,
I
but
agree
we
with that.
can't change the issue just yet. Yeah.
And this is the thing, trading this to the upside. Don't get me wrong, not against that. I'm not adverse to that at all. And if there's opportunities where you think that there is some longer term, potentially something longer term that can get you some profit to the upside, I completely go along with that. And actually, I would trade long to go short on many occasions. But I'm not
Yep.
doing that on this particular occasion. I decided a couple of days ago that wasn't going to be my play. I'm much more interested in waiting for the short opportunity. So that's going to be a price point that I'm marking off. Now, after I've marked off my price point, then I'm going to go down to my slightly more detailed charts, my lower time frames, and see if there are any other price points. Well, that would be one. If it broke that level, that might be another one that I'd be interested in short. Going to the daily chart. What does that suggest? Well, really, this if it came up to that point, it would be better because the gap then gets closed. Now that point is at 6,500, and we're at 5,500 right now. So that is a huge move to the upside. That's going to be 20% gain in the market that I'm effectively giving up. But it's not really a problem for me. And maybe the other reason I'm quite happy to let it go is that I am more into trading the shares, so I will take advantage of it in one way or the other. But I'll try and get the best share that I believe should be going up rather than the indice. So then I'm really trying to kind of draw my lines and figure out what's going on. And what we have currently is this little trend to the upside. And really all I want to do is just see this trend broken down. I want to see how these lines get taken out. If that trend gets broken down, then I'll start to enter in. So I'm mining down from a lofty position. I'm going top down effectively. So that is my personal view on this, and this is the way that I think we should be trying to handle it. Aussie dollar seems very bullish. Can't find another pullback yet. S&P down all the same. Yep, that's absolutely right, StarMax. They're all nice and bullish right now. And if you want to trade it long, not a bad time to do it. When we're looking at the FTSE 100 stocks, then FTSE 100 under the hood is currently trading and 92% of stocks are all in positive territory on the FTSE. So it has been waiting for this relief rally, and that in my opinion is what we have going on. So if you can get on board here, not the worst thing in the world. I'm not advising against that. It's just not going to be my play on this particular occasion.
Here's the thing. We've been talking about this for days and potentially weeks, maybe days. We don't want to be the first people to trade this reversal. What we want to be is the ones who trade it with confirmation that it has potentially reversed. How do we know that this is not simply people getting out of their shorts?
Yeah.
Why do we think there's a truckload of buyers here that are going to carry this 500 pips, 1,000 pips, which is what it needs to do to go back to where it was, right?
Yeah.
What makes us think that? What has changed? Has coronavirus been solved? No. Has the economies in each of these countries improved? No. What has happened to make this turnaround? That's really what I'm focused on. And I don't see that. I don't see anything that's changed. So to me, this is a relief rally based on people getting out of the trades to start with. That gathers momentum. And yes, there will be retail buyers in here, no question.
Yeah, and we've been waiting for this, really, haven't we? We've been waiting for a relief rally, you know, to try and get our shorts back in. So I'm watching this keenly. Now, there's obviously going to be different ways to trade it, but you need your strategy then after you've picked your price points and after you've picked sort of like, you know, the way that what you need to see on the price action, then you allow your strategy to take over. We'll have a look at the Aussie dollar. I'm gonna pass this over to you in a moment, mate. We've got relief going on as well with WCI. So oil is having a bit of a move to the upside. Look at it though, and it's still an absolute dog, isn't it? I mean, you know, you've got to say if you're going to trade anything short in a really kind of low area, then oil would be a contender. Just can't break out into anything significant.
Yeah, you've just got to talk yourself into accepting that there is reason why it's way undervalued. That's the thing, and I don't trade oil. So you know, I'm probably not a good person to analyze this, but when I look at the chart, it's exactly the same as every other chart.
Yeah.
Okay, it's put in a little bit of a base and it has had a little bit of a rally. The one thing I would say about this is it is putting in higher lows and higher highs. But has it broken the trend line? Probably not. So, you know, I'm still of the opinion that these rallies are providing selling opportunities.
Yeah, it looks like that channel might be of interest as well. Gets to the top end of that channel and meets this this line along here, then I think oil by tomorrow could well be a selling opportunity. That's what I'd be looking for.
There's some really good students and traders of oil in our organisation that are bullish oil. So,
are they bullish or are they just trading the relief, which I completely understand?
They're bullish.
Are they're bullish?
Because and here's a great question, actually. I've been meaning to ask it for days. You trade based on a lot of different ingredients, but primarily fundamentals. And now, you know, in the last, let's say, 6 months or so, you've been looking at the COT reports and also seasonals. Combined with all of the rest of the things. And I think the seasonals on oil would definitely be bullish.
Yes.
How do we consolidate that? Do we say, okay, seasonals are off the table because of coronavirus, or do we suggest that, okay, maybe if there's a little bit of a hint of a rally, then let's trade it, and maybe that's where these guys are coming from?
Yeah, do you know, I think that's a really good question, and the way that I approach that stuff is kind of twofold in a way. My first thought is that that seasonal bias is a percentage. So the first thing is that the FTSE 100 will have a 60 to 70% chance of rallying at this time of year. So for 30% of the time, it doesn't. And what kind of things would make it, one of those years that doesn't rally, and it'd be one of these kind of things. So I'll take the 30% into account when I kind of get a market as we've got, rather than sort of like believing just because there is a high percentage chance that it's definitely going to rally. But the other way that I will see it, and the other way I will look at it, is that a rally in the FTSE 100, what those seasonal patterns are saying is that the market will tend to close above its open on a week-to-week basis over that particular period, over that particular quarter or season, if you like, or let's say quarter. Mm-hmm. So on a week-to-week or month-to-month basis, it's more likely to close above its open. Now, the FTSE from the low to the high is probably up around about 15%. However, we're at such a low base that 15% doesn't mean as much as if it was at the high rallying 15%. So I would see this. I would see that the potential for this to rally and move to the upside really being an opportunity at this time of the year to short, with the back of my head thinking that there could be there might be a more likely time that that the market would collapse when the seasonals kind of like go slightly weaker. But I will look at any move to the upside that match the seasonals being relatively weak, not weak, because obviously it's a strong rally, but from a relatively small base, it's more of an unwinding, I suppose. I look at it as an unwinding of positions rather than a bullish run, because I think that's the confusion with seasonals. Just because it's likely to move to the upside, it doesn't necessarily mean that all of a sudden the market is bullish. It could just mean that that is a relief rally to the upside. We hit a block and then we start moving down again. So I think that's a really, really poignant question. And I suppose my answer is I will use it for a short in this particular period rather than looking for the long because the seasonals say that it should rally here.
Seasonals don't take into account coronavirus. Seasonals don't take into account any event that is likely to change the dynamics of the market. And I think that's probably the answer that I'm looking for.
Yeah, and this is the thing, mate. What happened to seasonals during 1929 and 1987 and 2009? And I suppose that's the kind of market we've got right now. So I suppose if you're looking at seasonals to a degree, you'd almost want to get even more detailed with what happens in specific market specific market environments, not just what happens year and year and year and year. Because I think if we match the event that we've got going on right now with something similar in history, then it is a recessionary probably comparison that we should be making. So that should really lead us to be thinking what were the seasonals during those periods. But that's what I'm looking at. That trend line looks good too, mate. So I'm looking at 6,000 on the FTSE. So we're really looking for another 400 pip bounce here to the upside before looking at the shorts with the FTSE, which I will be all over if I can get it. The people starting buying. Yes, people are buying StarMax, and this is the thing. When it's if you consider these points here in comparison to up here, remember, investors, so pension companies have to buy. They have to buy. There was a show yesterday, buddy. Yeah, we were all in. The pension companies they have to buy. That's their job. Hedge funds can go long and they can go short. That's their job, is to cover their upside with hedging to the downside. So that's how they cover their accounts. So people will be buying here. Now, the reason that people buy, the reason that hedge funds and pension companies buy, is not because they're sat at their desk going, right, how can I scalp this market? They're going 2-3 years out, this is going to be pretty good. is this a decent price? And then they'll go to their price to earnings ratios. They'll go to earnings per share ratios. They go to their PEG ratios, their EBITs, all the kind of parameters within their balance sheets that help them decipher which stocks to buy. And when they look at those balance sheets, then they will look at this event as a buying opportunity, because when the world gets back to some kind of normality in 5 to 10 years' time, those particular values, those particular companies will be from this point undervalued. So yes, there are buyers here, but they are buyers that are looking much further out than we are. So if you are willing to hold on to this market for the next 2 years, then this is a buying opportunity. There's no doubt about that. Because at some point, even if it collapses from here, at some point within the next 2 to 5 to 10 years, it's coming back to this point and beyond. You know, that will be the speculation. I can't say that, you know, absolutely, because you should never do that. But the likelihood is that's going to happen, because we are right down at this point to 2011 lows.
And the one thing we know about stock markets is they've always put in higher highs.
Exactly. And the reason for that is that there's always a buyer. There's always a buyer in stock markets, you know, because pension companies have to make money and they can only buy. So stock markets will tend to be something that you should look at for long opportunities. You know, and you can't get too caught up with that, because it does make trading stocks a little bit of a misnomer, and people think it's just safe to go in and buy and buy and buy and buy. But when you get an event like this, all those people along have just been run over. So you have to be very careful with that. But that is starting to look like a bit of a broadening pattern right there. So I'm really liking this price point, mate, as we look at 6,000.
You're getting there.
Yep. Yeah, because you look at this pattern and you look at this this potential horizontal level. This horizontal level is fantastic. Look at it. Bang, down, up, support, down. Now, what happens? Now, what the monthly, what we're trying to do in the next few days is get back to this level. So there's every chance this is going to rally right up until here without too many problems whatsoever. But it does look at that point that we should start looking for sell signals in this market. Now, let's do a quick fib on this as well and see what that gives us.
While you're doing that, Sanjay, I've been thinking about your question, and the answer is not yes, it's no. And the reason I say that is because we don't formally teach in ATW this strategy. And as you know, you're only supposed to trade on ATW accounts, ATW strategy. So this is not, at this point in time, an ATW strategy. So the answer is no, you can't trade it on an ATW account. Sorry about that.
I mean, I'm sure if you email James, he you know, and he'll get back to, he'll ask Paul. So I would be proactive with that and ask if that's possible. It might well be allowed. But Jeff and I just don't really know.
You know what's going to happen. What will happen is it'll come back to me, and then I'll have to devise a course for it and all the rest of it. And I don't want
to. Yeah, good point.
Come on.
Yeah, good point. Okay, so the Aussie is currently bullish. Similar situation with the Aussie. You know, you're looking for it to get back to certain levels to trade to the downside. But as Jeff and I were talking about, think about the Australian economy. You know, what is the Australian economy? What are they really based on? And it is fundamentally it's a commodity-based economy. Do you know what the GDP numbers are for the Australian economy, Jeff? I'm gonna Google it.
No, I don't, mate, off the top of my head. I did do this exercise about 6 months ago, and it's completely gone out of my head.
Okay, I'm gonna quickly do that now. So I don't know.
You want me to have a little run around the grounds?
Yeah, why don't you do that, and I'll see if I can find out some of this stuff.
Okay. So I haven't told these guys what I'm looking for. So
no, well let's do that. We're well and truly into the show, so let's do that.
Yeah, well, overtime coming up in 10 minutes.
Okay, there we go.
Roger D. Okay, we spoke about the pound. We've spoken about the euro. My take on the euro is this, right? And as most of you in the show would know, I've shown this chart many times. We are absolutely adhering to the channel that we've been in for the longest time, and nothing has changed. Every time we go out of it, we come back into it. Every time we go out to the low side, we come back into it. And we've just done that again. What I am saying, however, is that there is another level below here that we haven't really had a look at, and it's 105.50 as I've got it on my chart. And I'm still in the short on, am I on the right chart here? There, this account. So that's exactly how I've traded this. We traded this from here to here, and we were still trailing at that point and got most of this. And that was my exact thought process when we got to the bottom. We got in here. We couldn't get into this as quickly as I would have liked, but we got in. And when we hit the bottom here, we took 2/3 of our trade off. But this level here is still like 200 odd, 300 now, 300 odd pips away from where we are. And I still think that's a potential price point, if not even a little bit lower, maybe down to here somewhere. So I'm still staying in this until that happens. The flip side of that is if we were now to pull off this weekly pivot and put in a lower high, sorry, a higher low, especially at this level. Well, that's not very evident. Let me make that a little bit more so. If that was to happen, a higher low here changes my bias immediately for clear and obvious reasons. So what has to happen next? And I'm at no risk here. I've still got my stops at entry, basically, or not basically, I have. But I've taken most of my profit. So it doesn't matter if this even goes back to here. I can't see that happening quickly. So maybe I've got other chances to trade it up to there. I don't know. But it's certainly if I see a higher low here, that changes my bias. And maybe I will trade it back up to here. I'll make that call when it comes. But this goes to exactly what we've just been talking about, and the momentum and the reasons, the fundamental reasons why the market has gone short or why it's gone long in reverse circumstances. We're guessing right now that this is going further. It's pure guesswork, nothing more than that. So until I see that higher low at a significant level, this would be that, then I'm still a bear. I can't get away from that. So this may well be a selling opportunity right now where we are on the weekly pivot. It's not only the weekly pivot. There is a little bit of form across the board there as well. If you go wide enough, you'll see that that we have had, this is price here, the white line, we've had support here, we've had resistance here. It's not the silliest place in the world to go short, I can assure you. I'm not yet ready to do that because I don't see the right signal, but on different time frames, different crosses, I'm certainly ready to do that. We just spoke about euro pound, that's one of them. So that's the euro in my opinion. Dollar yen, same in many regards. I love this, absolutely love this pattern. I'll point this out to you guys. And it's my take on a recognized chart pattern known as the Three Little Indians. Now, I'm probably the only one that's looking at Three Little Indians at this time, but there they are. And what they're telling me is that this level here, the top of the range that I've got, has been false broken 1, 2, 3 times. When I see that, I've got an immediate short bias. And if it were to happen in this area, I'd have exactly the same in reverse. I'd have a long bias. But not only that, when I come back into the range, and then presented with a lower high, that's my trigger to trade this short. Not only to here, but beyond here. And it's a pretty tricky exercise to take, but I go 1.5 times the range. So instead of it being a measured move, if you like, top to bottom, I go one. Let me get rid of all this noise. You're probably following me by now. I hope you're following me anyway. If you're not, then probably another day we'll talk about this. But what I see this as an excellent shorting opportunity. If the highs are taken out, all bets are off. But in the context of this chart, look where we are. We're bang on the top of this range. Let me go back to the euro for a second. What happens when we're in one of these channels? We go from the top to the bottom, and it happens time and time and time and time again. So that's exactly where we are on dollar yen, in my humble opinion. Best case scenario is if it breaks out, then comes back underneath, a la euro dollar, as this did, right? So that's what I prefer to see. But I'm still of the opinion, given what I've just discussed, that this can go short now. So I've just got to wait for the opportunity to do that. It's not there on the weekly, it's not there on the daily, it's not there on the 4 hour, but what may be on the 4 hour, because I've got a structure here that suits me. And I've got the 3 little Indians backing me up. And all I need right now is price to get back into here and give me a lower high. And that's my trigger to go short. So there you go. That was probably a little bit advanced for a lot of you, but that's exactly what I see. We've been triggered into the pound long, so you should have cancelled the short, guys. At this point, your stop loss is still where it needs to be, and that is in exactly the same place it was. We've now got the breakout here. This is our first 15-minute bar. That'll close in 3 minutes. We can't move our stop yet because we need another buyer bar to follow it up. If we do, then our stop comes up to here. If not, we wait for another 2 buyer bars. And we've already discussed the pound. Now the Aussie. I'm a bull the Aussie, but not yet. And I don't think I need to explain this any more than we already have, Ash, because this is now just guesswork. Is this going to here? Maybe. But I don't think so, not in the first instance anyway. These resistance areas provide us with excellent selling opportunities, in my humble opinion. And as I said to you before, Aussie Swissy is my favorite for this, and I do have a short limit order set on Aussie Swissy. I'm not going to give you the levels because I keep giving them my every day and I'm not supposed to. But I consider this to be a seller. Where is the question? And that's the issue with the Aussie, because it's gone so far on Aussie Swiss. And if you're following this show only a few weeks ago, I pointed out to you guys that if this level were to go, we're in an incredible chasm. And we did get into that chasm. We've gone a long way into it, some 1,300 pips or something like that, as I recall. From the breakout, not quite. 1,100 pips from the breakout. That's pretty cool. I got out of this way early, way early. But anyway, that's the way it goes. I trailed my stops too tight. Now, is there a reason for this to reverse? Not yet, in my humble opinion, but it has gone a long way already. So, you know, you can count me wrong on that if you want. If you manage to get in here, then you're a genius. I'm still waiting for the higher low before I consider going long on that. And I do think it'll go long at some stage. I just don't know when that is. I think probably end of coronavirus, maybe, when we start seeing lots of production come online from China, for instance. If that starts, then the Aussie will rally, blah, 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 blah. We all know the theory behind it. Dollar CAD looks like oil is continuing to rally. Now, I've been waiting on this one to reverse, and at this point in time, it's exactly the same story. We do have a potential for reversal, but all we've got is a potential. We haven't got the lower high that I need to see. So I'd love to see a bounce off the weekly pivot. then the lower high, then I would get interested in trading it short. So at the moment, on the 4-hour chart, there's nothing for me to do. Had I the inspiration to trade it short as a breakout here, then maybe I could have done that and traded it to weekly pivot. But that's a dangerous trade for mine. It's not really giving me what I need. You could argue that we've had a double top and a succession of lower highs. Wouldn't argue with that. Can't argue with that. That's absolutely what you're looking for. But I'm looking for it on a bigger picture thing. So I want to see this bounce off here, then give me the lower high. Then I can get serious about trading it short. So, nothing's changed. It's all the same. Dollar Swissy is exactly the same scenario. And the thing I do like about Dollar Swissy is, once again, that we are at, pardon me, an interesting point. When we come off the bottom of a range, I'm looking for what? A lower high. Does anybody see a lower high on that chart? No. Do you see a resistance level? Yes. Am I waiting for this to come back and give me the higher low, that I want? Hell yes. Can I trade it to there? Yeah, maybe I can. Smaller time frame may accommodate that. So my bias immediately is short-term short, and I underline that because I have not got a short bias. I've got a short-term short bias, and this one, if it were to come back to here, for instance, would give me a happy day. Even if it came back to the monthly pivot and I could trade it to there on a 30-minute chart, why not? Don't have a problem. It's way down here somewhere. So that's the kind of thing I'm looking at. I'm looking at a break of resistance in this instance, as I always am. It's always the same thing for me. Maybe that's the resistance level there. We got up to there, back underneath it, retest it, then I can trade it down to that level that I spoke of. So that's Dollar Swissy, one to go. Kiwi, same exactly the same boxes the Aussie is in. And a lot of these, we have come off the bottom. We're having a rally of some kind. What that is yet to be determined. Okay, we've had a bullish engulfing bar and a higher low. That's tradable. I think I said that yesterday, because that's exactly what you're looking for. But it's only tradable to resistance areas. Once you hit that resistance, you've got to take profit. There's another resistance area probably there. That's a shorting opportunity for me. But if you can trade it up to there, happy days. And they're the kind of things that I'm looking at the moment. So I'm very much in Ash's court, waiting for the levels to be hit so I can get back into the trend, if you like, or certainly the momentum of the day, week, month. And it is nothing's changed. So it's all still the same. It's just these rallies are providing us with good opportunities. So there you go, mate. That's around the grounds. As always, It takes a little bit longer than we anticipate, because I just get into, you know what I'm like. Once I start, I just can't stop.
Nothing wrong with that, mate. Nothing wrong with that at all. And I don't think it actually took that long at all. So
didn't it?
I think it's good. No, I don't think so. I think a bit of detail is always good.
Couple of things. Free Donkey. How to set a trailing stop loss correctly. Well, if you're trading manually, you simply just go to terminal view, or if you drag it, you can also drag it, right?
Yes, you can.
But you do have to enable that, I think. So we've now, funny you should mention that, because we can now trail our stop, because we've had 2 bio bars after entry. So we're now trailing our stop to 118.44, which places it still at risk, I think, but very little. If we lose on this, this would have come back now and snap back. Where was our entry? Here somewhere, about here. So we need another buyer bar. And as soon as we've got that next buyer bar, we're okay. That was our entry there, 118.74. So a couple more buyer bar. Well, actually, what I'd like to see now is a pullback to that area and then go again. Then we can get a nice little trail going on. If you're doing it on the ATW Trade Manager, you should have the option to trail 2 bars. So if you go into modify and then look at the right-hand box, I think it will ask you, or it'll give you the option of trail stop. And then when you click on trail stop, it'll give you the option of trailing, weekly pivot, daily pivot, whatever. One of those options is 2 bars. So just click on 2 bars and away you go. I think that's all I needed to answer, Ash, at this stage. I don't know if there's any more since I looked.
Okay, mate, that sounds good. I am just having a look at some of these stocks here and seeing what there is out there. Maybe Unilever could be an opportunity for some upside, but yeah, I think we are, to a degree, in a bit of a waiting game. FTSE 100 currently at 56.50, so about 300 pips away from that 6,000 level. Just hit a potential area of some resistance here. So really from here, I'm starting to sharpen my interest in the FTSE 100 short, because the thing is, as much as that 6,000 level has got an opportunity to arrive at this particular point here, looking at this FTSE here, as much as this 6,000 point level has got a potential to be seen, there are of course areas of resistance right the way up. So if we look at this on some of these timeframes here, then we do see a potential resistance point along here. Maybe not so clear on the daily, but you can definitely see it on the 4-hour charts here. So this is the next area it's got to get through to get to the next leg up. So there's a chance that it might pull back here and then go again, or of course there's a chance that it actually could fail here. So from this point here, I'm starting to get interested in potential shorts with the FTSE. I don't think the rally to the upside is done just yet, but I have to listen to the chart and certainly trade the way I am thinking of the overall market. So if the short does end up being here, I don't want to miss it. So I'm not going to get in just yet. So I'm going to wait until things develop. But we are at that potential first point that we could start considering. Okay, mate. Well, I think that's pretty much us, isn't it? When it goes, Sanjay, 2 bar in Trade Manager is about 2 buy bar, or any 2 bars.
It will know, mate. If you placed a buy order, it will know what bars you want to trade trails. So just 2 bars is fine.
There you go. Pretty clever stuff. Okay, so let's.
AI, mate. I don't know. It'll be the end of me.
It is on its way, isn't it?
LT 3 Little Indians presents a short bias. What about the support prices? I'm not sure what you mean by that. The support prices. PL on Tuesday, Wednesday, Thursday, I have a clear mind. You're right. Don't talk to me on Friday evening or Saturday evening, however, that changes. Investment. Chandru, I had a long on euro. Yeah, I did. But that was when it was going long. That was kind of...
That was a while ago, wasn't it?
Yeah, and it was a beauty. It got us a really good result. I think that was our 15.5 to 1 trade, yeah.
There you go. There you go. Can't argue with that.
I think we're just about done on those questions, though. Yep. So I'm good to go. Yep. No more.
Yep.
All good.
All good. Okay. All right. We'll be back tomorrow. Do it again. Same trade time, same trade channel. We will be...
actually, on that point, we should, I guess, pre-warn people that next week there's a change of time.
Oh, yeah.
Because London Open will go to, what is it at the moment?
Let's go forward an hour.
4 o'clock Singapore, Hong Kong. So that will go to 3 o'clock Singapore, Hong Kong. Yeah? Is that right?
We go forward to catch you guys up. Yes, 5 to 3. Yeah. Yeah, which is normally what it was, wasn't it?
Don't ask me that question.
I think it was. I think I mean, 5 to 8, don't be late. It's brilliant, but maybe we need something like when the clocks change, 5 to 3. time for
home for tea. No.
It's going to take us a while. It's going to take us a while. We'll figure it out. In fact, our answer's on a postcard. 5 to 3. What can we have for that? Just to remind us that that's the time.
There could be a competition.
Yeah, maybe a competition. Well, I don't know what the prize would be though.
Half hour with you.
Yeah, okay. Half hour with me for the winning. I mean, you might win, Jeff. Which
there you go.
there's still that chance, isn't it?
I'm bound to be a contestant.
Yeah, me too. I'm going to be a contestant as well, and I'll spend an extra half an hour with myself at the end of the day. So right. Well, we
I don't want to know.
We better go. 5 to 8. We'll be back tomorrow. 5 to 8 in the morning.
Don't be late, guys. That's a date. See you later. Have a good one. Bye bye for now.